Ladies and gentlemen, Texonnect ecosystemists, Texonnect members, and everybody who's watching this beautiful channel. We are back with Texonnect Season 2, Episode 2, and this time we want to talk about money. Show me the money. And we are here with the legend himself, Jeremy Quainoo. He's a fintech guy. If you don't know Jeremy Quainoo or you're not following his channel, I really don't know what you're doing, or maybe you're not that interested in money. So you better do so. Mr. Quainoo,
Yes, sir.
nice to see you.
Thank you for having me.
What's going on in your space these days?
Like you said, chasing money, leveraging tech to make sure that we are chasing the money more efficiently, making sure we're staying abreast with the trends so that we take advantage of what it can do in terms of economies of scale, efficiency. We'll get into it.
But I thought that's why we have artificial intelligence, so we don't have to chase the money anymore. So,
Yes,
so the software can intelligently find the money for us.
you play a large part in making the software intelligent. So,
So let's talk about the big picture. How
Mhm.
is artificial intelligence fundamentally transforming the entire financial industry? What are the key trends that are driving this change?
Sure. So I think we are one of the industries that has significantly benefited from the advent of AI. I am one of those who doesn't think that AI's application in finance is overhyped at all. I actually think it's underhyped. What AI does for the financial services industry is that it moves us away from a reactive solution stance to a more proactive and predictive automation of intelligence in systems. So you begin to see that now we can do things like hyper personalization in financial services for different demographics of people. As we've spoken about, I mean, there's the buzz now. The younger generation likes to have a financial experience that is akin to a social media experience. With AI in financial services, you can automate, you can structure, you can tailor the content, the customer journey in such a way that it is more appealing. One of the biggest challenges in financial services is fraud, right? The reason why the incumbent banks are let's call it the receptacles of all our money is because there's a trust relationship there because they are better at detecting fraud. However, as their systems scale, as the customers scale, detecting fraud on a case by case basis for a human who is working 9 to 5 can become almost an impossible task. AI steps in to allow you to automatically detect fraud 24/7, right? No sleep. It's able to analyze patterns, be able to find, like, there's sensitivity analysis that is able to determine if somebody is trying to game a system or not. In one of the most common fraud, some of the fraud aspects that we see is like SIM swaps. You're able to detect that this is not a actual person trying to make this transaction, and AI comes in to help with that. When it comes to lending, right, a lot of the buzz around driving financial inclusion is about bringing people who are outside the financial service system inside. But the problem there is that a lot of them don't have formal bank accounts or any kind of financial transaction history. So AI is coming in to say that you can score the same people using alternative data, using their mobile money transaction history, using their social media behavioral analytics, and you actually get a more accurate reflection of the person's propensity to take and repay a loan. So there's a number of areas that AI is revolution within the financial services sector, and it's only going to get more efficient and even better, including more people.
This is super exciting. Now, you mentioned customer journey.
Mhm.
I want you to talk a bit about how AI has improved the personal banking experience.
Okay. So AI comes in to one, bring in a lot of automation and efficiencies, right? One of the challenges of a customer journey in, let's say, our part of the world is that you don't have a lot of people who are financially literate, and you don't also have the resources to handhold every single customer through your customer journey. So you have to find a way to blend all of that into the customer journey, meaning that make the customer journey so intuitive that anybody could look at it and understand what to do next, and also bake the education into the customer journey. So a person knows that or learns from the journey to know that if I, let's say, take a loan and I repay early, I get a higher amount, a longer tenor. Without somebody coming to tell you that if you have a better behavior on your loan, if you behave better on your loan, you get rewarded for it. You can now bake that into the journey so that, for example, if a customer knows that if I were on a Facebook or on Instagram and I like a service, I have a like button there so that they know that you liked it. If somebody takes a mobile banking app and they do a transaction and they realize that this transaction took me just 4 steps and I'm actually happy with it, you actually do get real-time feedback to let the developer know that this is a feature that people actually like. People go on apps and they just don't know where to go. Something as simple as detecting that a search button within an app let somebody know that mobile money transaction is as simple as going to the button with the money icon. So automation, AI is coming in to be able to allow you to gather real-time feedback in the customer journey, to know how to iterate and make it better for the customer, and also bake in education into the customer journey so that people are able to follow through intuitively. And you can scale that on a large basis now that you have this silver bullet that is AI.
Silver bullet. I like that. Let's drill down on credit scoring and risk assessment. How is AI improving credit scoring and loan approvals, particularly for the underbanked populations in Africa and emerging markets?
Great. So I think that's a very good question. The, there is a population of about 350 million unbanked across Africa. And even though mobile money has come in to close that gap even more, there's still quite a ways to go in that regard. The challenge is usually a combination of proximity, the financial illiteracy that we've spoken about, the anxiety that people feel when it comes to going into a formal institution like a bank where they feel anxious, they feel intimidated, also, they simply don't have the documentation, the collateral that a bank is asking for. So this is somebody who is actually running a business. This is your grandmother in the village who owns, 4 acres of a farm and is making produce, but she's never opened a bank account. And because of that, she cannot access a loan and she cannot access a savings account. What AI allows us to do is to look at alternative sources that they do have and use that as the determinant of whether this person is indeed qualified to take a loan or not. So a classic example is what my company does, Jumo, is we leverage the alternative data that is mobile money transacting history, as well as your GSM, GPS location history, and use that to form a persona of whether Papa is indeed a good paying customer or is a bad paying customer. It's not only limited to the data that we have on you, is that we have so much data on so many other people who are similar to you that we are able to detect the patterns to determine that Papa matches the persona of a good paying customer because we have so many Papas in so many different countries. And we can tell that as soon as Papa starts acting this way or transacting this way, he's about to go delinquent. So we can stop the process early, or we can tell that Papa has now made a jump in his life, so you can offer him more. So AI gives you a lever to not only make people more eligible, but also to shape their behavior when it comes to lending. And it allows you to lend out to more people because now you can scale faster because you do not need a traditional credit officer to sit down customer by customer determining if somebody's eligible or not. You can now have a system that is using patterns within data, learning from previous data, and making predictive, anticipatory calculations as to which of your base is eligible, and then you can proactively reach out to them and make them offers. So it's really helping a lot to drive financial inclusion because the combination of the rails, which is mobile money, the technology, which is artificial intelligence, machine learning, algorithmic assessment, allows us to grant more tailored loans to each customer who was excluded, even without having traditional financial history.
Interesting. I'm just looking at the possibility. I wish this had come or shown up during my mother or my grandmother's time, but anyway, as well. Let's talk about AI and algorithmic trading. What role does AI play in high frequency and algorithmic trading, and how does this shape market trend and volatility?
So I wouldn't call myself an expert in algorithmic trading. However, I think that what AI does in that space is democratization. We used to have a limited group of people who were considered the go-to experts who were going to be studying market trends, who are going to be making these predictions, who are now going to inform you. And you basically have to take their word for it based on experience. However, now AI allows the system to be able to check multiple sources of data simultaneously in real time. So social media sentiment, the market reports, the news that's coming out, and using that to form a how do you call it, to form a risk score that you'll be able to match with your customer. And you begin to notice that a lot of the demographic that is interested in algorithmic trading are usually Gen Zs and younger, because they have built an affinity for trusting systems. So rather than putting my trust in an individual who I don't know and have to just rely on their experience, now you have a system that is easy to understand, that is able to give you a track record and is using the kind of sentiment analysis that you understand to be able to make investment decisions or at least recommend investment decisions. So I think it brings in the democratization, it brings in efficiencies. You get real-time automation when it comes to that because you don't have to wait till after the news is out. You are getting this in real-time feed. And essentially efficiencies are what it brings to that phase.
Wow, it's like we can't even compete. I mean, it's a whole new world. Let's talk about robo advisors,
Mm,
especially in financial planning and wealth management.
mm.
How do they leverage AI to provide financial planning and investment advice? And can they truly replace human beings?
Okay, so when it comes to wealth management in our part of the world, I call it a very high touch segment because as much as AI can come in to enhance your wealth management practices, I do not think that it would ever get to the point where it will be completely replaced, at least in our part of the world. Because people want to engage with somebody when it comes to managing their actual assets and their actual wealth. So even though it can make the wealth manager more efficient, there is going to be the need for them to you essentially automate the tasks that can be automated within the wealth management processes, which is the documentation, the analysis, the scoring. But when it comes to the actual planning, you need to actually understand what the client's needs are, their wealth goals and wealth targets, and where they are on that journey in order to give them the options. And it's a personal conversation that people want to have with a person. So even though the wealth manager can leverage AI to enhance themselves, it does not completely replace them. At least that's what I think.
Somebody said the intuition and the empathy is important,
Very
to understand the sentiment with which that person is trying to do that. And
100%.
so you advise them using that. Let's talk about reg tech,
Mm.
regulatory technology. With increasing financial regulations worldwide, how is AI helping financial institutions remain compliant? What are the risks of AI-driven compliance?
So AI comes into the regulatory space right on time. I think there was a report that said that every 7 seconds there's a new regulatory policy that financial institutions must comply with around the world. So every
Interesting.
7 seconds there's some policy that's
That
come
is
out, a
crazy.
new one that a bank or a financial institution, mobile money operator must pay attention to. The only way to be able to comply with all of these is with the support of technology. What AI does is it's able to create sort of like a list, more like a sanctions list that it checks against to make sure that all the operations that are occurring within the financial institutions are matching with the most recent regulation that is out. But it's not just on the recipient side. Even those who are supervising the regulators, the Bank of Ghana, the Bank of Europe, also need a way to ensure that these policies and these supervisory sort of directives that they are putting out are also being complied with. But there's just so many of them and so many players and so many actors that they need to fall back on the efficiencies that AI brings, which is why, apart from RegTech, we now have subtech or supervisory technology. So even the regulators are having to innovate in order to make sure that regulatory compliance is maintained. So I think AI is doing both a lot for both of them. Is allowing the banks to be able to understand and match real-time policy directives to their transactions to make sure that they remain compliant, and is allowing the supervisor to also be sure that the policies are being complied with and that they can monitor it in a real-time basis in a scalable fashion. So it's bringing efficiencies to both parties in that regard. The danger there is when you have two systems that are interfacing with each other or checking each other, you now have the human element taken out. One of the big risks that somebody highlighted to me is if it gets to the point when AI is learning from AI, then they begin to create what they want. So at any point in time, you want there to be a controlled environment where the data that is being learned from or being used to train the system is human generated or user generated, not AI generated. Because then you stand a chance of creating what we've seen in the movie, where AI is communicating with AI, they are churning out their own artificial data and artificial intelligence, and they are building off of their own assumptions. So you do not have a chance check the biases that are being created, and it's going to make its own assumptions. And you're headed for chaos if that happens. So those are some of the challenges, and that is why we're moving towards what is being called AIX. It's easily explainable algorithms or explainable artificial intelligence, where you cannot build an opaque AI system. It has to be very transparent so that audits are able to be done and people can understand what data is it trained on and what are the outputs and how is it functioning in line with what it has been instructed to do. So little by little we're getting there, but there's still work that needs to be done.
Human beings, we got to be smarter. So you talked about bias. Let's talk about ethical and bias challenges in AI for finance. How do we address bias and ethical concerns in AI-driven financial decision making, particularly in lending, hiring, and risk management, and especially in this part of the world?
That's a very difficult question to answer. I read a stat that says that even though AI engineers are in such high demand, now there's a shift towards ethical AI engineers because they see so many risks in this space that need to be addressed. Bias is a function of data that is not well structured, that is not well cleaned. It's the thing that is said in technology, garbage in, garbage out. So in order to reduce or mitigate instances of bias, you have to make sure that you have the right kind of data that is going into a training set. The challenge in our part of the world is we have a lot of unlabeled data because you are trying to get data from people who have the data fragmented in receptacles that are basically scattered all around. If I ask you today, where is your Ghana card data stored? Versus where is your passport data stored, versus where is your driver's license data stored. These are all being kept in multiple different places that are not labeled the same way, that are not structured the same way. So if you dump all of this into an AI model, you have to be sure that you are guiding or you are cleaning and making sure that the filtered channel is what you want. Otherwise, these biases will come about. And that is why the oversight of humans is still quite relevant. So in our part of the world, you have to understand the challenges that exist with the source data and know how to filter that through into a training set. Plus, there's also cultural nuances that have to be baked in. There's certain differences between just taking a system that is globally, an AI model that is globally accepted and doing a copy paste in our market when we are so nuanced in terms of how fragmented a market like Africa is. So you cannot assume that because customers are repaying their loans at 90% before due date in Ghana. You just go across the border to Togo and it's going to be the same. The cultures are completely different. Ghanaians may have a culture that is where they feel embarrassed if they owe. In other markets, it's not the same. At least that's what I have observed. In certain markets,
You know, it's interesting you say that because when I then make my analysis, especially as a human being, saying that, oh, maybe I perceive that in Togo this will work. Already I'm introducing a bias because that's based on my bias and my perception. So how do you even justify that what you're saying is a fact and it's not bias that's being
100%. Being aware of the biases is the first step to solving the bias. But if you're not even aware of it, then how do you detect it? So that's why ethical AI hackers or ethical AI developers are becoming so prominent because that's their job to make sure that there's ethical streamlining when it comes to AI.
Are you required to have some psychological background?
They are required to undergo extensive training, but they are also in quite high demand because it's almost becoming a regulatory requirement that your systems need to be audited, and most of those who are going to be audited are going to be people with that kind of background. So that's a career.
For those who claim you don't get jobs, man, that's a career move. That's a hot career move. Yeah. With some good pay, huh?
Yeah. Interesting. It's in high demand.
High demand. Let's talk about the future of AI-powered digital currencies and payments. How is AI shaping digital currencies, blockchain, centralized finance? And what does this mean for the future of traditional banking?
That's quite a loaded question. Earlier today, somebody made a comment about Africa being a crypto first market. And I was quite surprised. Crypto first market.
Interesting.
And I was quite surprised by that because I was like, how many people do I know who are actually using crypto? And he was like, the numbers don't lie. Africa transacts a lot with crypto, primarily if you go to markets like Nigeria. But I think the case that they were making was there is actually a problem that cryptocurrencies or that's called a blockchain-based digital assets solves for us. For example, Ghana has now been rated the most interoperable the country with the most interoperable financial rails and financial system. Because for us, it's a normal thing, but we don't realize that's a luxury for many people where you can move money from mobile money to bank, from bank to other asset classes. But the problem with that is you may have mobile money in Ghana, and somebody in Uganda also has mobile money, and somebody in Nigeria has mobile money. But for some reason, you cannot send mobile money to any of these countries. So the cross-border gap still exists, and that is where the digital assets come in. So digital assets have the advantage that there is actually a need when it comes to cross-border transfers, cross-border movement of money. And blockchain has come in to decentralize all of these and allows people to move that in. As we've seen, now the regulators and the authorities are beginning to get in on that, which is why you're now beginning to see central bank digital currencies being propagated. But the flip side of that is the whole point of decentralization is to decentralize. Whereas when you have a singular entity that is coming in to dictate, then you're going back to a centralized system.
Sounds like you just wait till the rest of the world is innovated and you come in and say, let me get my cut.
Usually innovation goes ahead of regulation, so it's the norm. But you just have to understand that this is what we're going to be seeing more and more. We're going to be seeing an interest in the digital asset classes because they solve real problems in real markets like ours. And they're going to find ways to make sure that they align more with regulation so that people do not get banned or penalized for using a system that solves a problem for them. That's a real need.
Now let's talk about the future of work in finance, AI and job disruptions. With AI automated more financial tasks, how should professionals in finance prepare for the future job market? And what new roles will AI create?
Another amazing question. I don't know the stats exactly, but the future of jobs report that is recently released by the World Economic Forum talks about, and it's been the same since 2016, about how, and a specific number, and I probably will find the actual numbers, but I think about 47% of jobs as we know it are going to be lost to technologies that are emerging like artificial intelligence. But at the same time, AI is going to create new jobs. It's the same way back then when you would go to a bank, most of the time your details were kept in a notebook, and even to check the balance on your account, they would write on a piece of paper and they would have to go tally. When internet banking came in and people had to now check on the systems, those that were handling the notebooks either had to be trained on the new system or they had to be redeployed into some other area. That's the same thing that's happening with AI. AI is going to bring a lot of efficiencies into the financial services space, and jobs are going to be displaced. It's just the reality, but jobs are also going to be created. So even if you're not within the financial services space, I think the onus is on each individual to understand how AI is impacting your industry. The first thing is being aware of it. The second thing is understanding how AI could make you better at your job, or pick the aspect of AI that you find interesting and think about how you can educate yourself on that. Even the fundamentals of what AI is the first step. As a leader, you have to be able to understand how to upskill your people on yourself because most change takes cue from leadership. So it's very important that you stay aware of the trends. You understand that it's not a matter of if, it's a matter of when. And you start taking those proactive immediate steps to upskill, to educate yourself, and identify what changes are imminent in your industry and make sure you get a head start. For those who are super proactive, as we've spoken about, there are currently the jobs that are most in high demand in the space right now are typically fintech engineers, AI developers, blockchain specialists, blockchain analysts. So you can tell the trend and you can decide to pick your sort of path based on what's available there. So the opportunities are endless, but the world of work is definitely evolving rapidly.
So not so much loss, but evolution.
Evolution, evolution, evolution.
Jeremy, any last words for our audience?
I think the future of the financial services industry is fintech. It's going to be a combination. I've heard a term called augmented work. It's going to be a combination of your natural human skill, be it the soft skills, the natural technical skills that you have, but then also the advent of bringing technologies like artificial intelligence to make sure that we build synergies and efficiencies. You can get a head start on that if you are even aware of what change is coming and knowing how to position yourself. So there's two ways to see it. You can see the glass half empty or half full. You can worry about technologies like AI coming into your space, or you can be proactive and think about how to leverage technologies like that and get ahead. So the choice is yours, but the change is coming, and I hope that you make the efforts to take advantage of it as opposed to being taken advantage of by it. But the future is bright.
Thank you so much, Jeremy, for spending time with us. The future is bright, change is coming. I think the most apt advice we can give you is stay connected to TechConnect. Make sure that you're following us regularly so we keep you ahead of the trend so you don't get phased out, but you evolve and be better. Peace out.
Cheers, guys.